Yeah.
All right, dude, let's not waste any time. Let's get into it. People are curious. Let's pull up the S&P chart.
The S&P, did you see my video? I was like, I don't know if I should post this or not, but I went ahead and did it.
All right.
Can you share that? I just posted on my timeline on Twitter.
Okay.
It's like 30 seconds. I cannot be the only one to see this, right? Like, there's no way. But I was just looking through some charts just the other day, and I'm like, well, what did the last little drawdown look like? And I mean, pretty clean channel, up, finally breaks, and we get this little pullback. And I'm like, well, I mean, what did it look like? Look like this, a little blip with a little press higher. I don't know. I mean, do we have the same thing? And I'm like, well, do we? Same channel. It's not going to look good, my dude. Like this. No. No. Like, once you see this, you can't really unsee it, right?
Okay, so fair warning to everybody. Jason might be a little bearish today.
No, it was a joke, jokingly, right? But it does rhyme. But that's my warning, right? Like, I think the question is, well, you help me, Amit, or the chat. Where is everyone right now? So, like, you don't want to know if I was positioned for this. You guys don't care about that. If we're making money on the downside, what are we concerned with today, right? Like, that's what I kind of need a little help with. Do we want to know? Do we buy?
I think people. So the past is the past. I think people want to know. I think the two questions people are concerned about are: for every stock, do the technicals signify that there's more pain ahead? Obviously, we don't fully know, so it's our best guess. And then two, is this a dip to buy? Is this an entry on a technical perspective, even though it was caused by some fundamental narrative with the tariffs that is attractive?
Because fundamentals would be involved here. I think you have to pay a lot of attention to that. I mean, some people that are like purists in the technical world, like the pure technicians or pure chartists, will be like, oh, it doesn't matter about the news, right? And I think in theory, that sounds really cool on paper. Like, you don't really need to pay attention to it. Everything's built into the chart. That's what they say. I'm not that guy. I do believe that you have to pay attention, but I will say there's definitely something to be said that when there's a fundamental event and it does line up with technicals, what you thought might be support is probably not going to hold. It's probably going to go beyond what you thought a good spot would be. Is it a dip buy? That very much depends on your time horizon, right? Is this the low? I don't think so. Did I buy anything today? Other than my Freeport and some like it's the K-shaped economy, right? So my question is, well, did we just put the highs in for the year? And like it's for right now, what we know to be true is that we're not going higher.
I don't think we did, but to your point, it would be very reminiscent of 2022 if we did.
Yeah, and so like you think back, what happened back then? We went into a rate hike cycle, right?
Right.
After cutting. And so that right now is war, whatever, etc. Those are very temporary things. Most of the time, very viable, probably not on the first pullback, but absolutely viable. Then again, I would preface that with what you thought might have been support in the past is probably going to go beyond that. So you might want to go a couple levels lower. But when you think about what's going on, we have super hot GDP. Inflation's still there. But at the same time, we have a lot of rate cuts that people are thinking are going to come. It's still about the rate thing. So like if for whatever reason GDP runs ultra hot and the economy is like, blazing fire, we're probably not going to get any cuts. And quite frankly, we might have something called a hike. And if that's like the black swan kind of scenario, that's what would throw everybody's thesis out the water. And it would probably get priced in for 2027, that maybe we see something, which means that dip for the midterm election is not until the eating season of 2027. So I'll preface with that. like where we might bottom out. If it's all, mirror exactly the same, this is not going to flush down tomorrow. No, it's probably going to bounce for sure. And it'll probably bounce to somewhere around today's or Friday's close. And if we can't get over that, that's probably a good spot to, we lock in this trend structure. And I'll go ahead and start the clock here. But we're always counting the trend, right? And so this is, you guys can see my watermark. Everything's clear-ish.
Yep, you're good.
Ish. So we have, a very clean and clear uptrend for sure from Liberation Day lows. And what I'll preface that with is it's extremely steep. Today, for sure, what we did do is we absolutely broke that. There's room to the downside if I just connect a couple of these from the lows. There's actually more room, but the very steepest part of this curve or this trend channel, if you will, it broke today. So where I think we go, again, because I do mix these fundamentals and technicals a little bit, and I'll just zoom in just slightly, just so you guys know, we always talk about NFP days and non-farm payroll days. And throughout the last technical Tuesday, what I was saying is look, what we need to see is a full day open and close above this 695 high. And we didn't get it. What we did do is we tested it once, but that's a test. It's not like you're actually breaking down. Today we have a gap down below, and in this situation, in this system, if you will, when you lose one level, I might be able to make this a little bit bigger. When you lose one level, you go to the next level. That's kind of like how this works. Let's see, huge is probably too big. All right, but you can definitely see the levels now. But when you lose one level, then you go to the next one. And actually, that's exactly where we opened at today. If we go down another one, the next two are around the 675 level. So quite frankly, I think at most that's where we could see this week. But at the same time, it's we just moved an average week's range, what we typically move in a week within less than a single day. So to expect it to just continue to flush also, probably not so much. Do I think that we can bounce off this 670, between 670, 675, just under 675 type support? This is near-term support. I think we can. But again, trader hat on, investor hat off. If that goes up and then we have something like this that gets rejected, that's about what we're talking about. So structure has been broken near term. And at worst, you got to let it play out and wait.
Now, if Trump tacos tomorrow, that structure could be back intact.
Exactly my point, right? So right now, you got to pay a lot of attention to what's going on in the headlines. Can this get worse before it gets better? Yeah, I don't think it can get a lot worse this week. No. And for me, it's just think we're coming off the highs. Some people are probably scared. People act completely irrationally, and they might be in the sell the pop kind of mode instead of buy the dip mode. I mean, if you bought the dip out of the gate this morning, you were probably feeling good for about 45 minutes, maybe something like that. And then quickly what do I do? And so you have to think about that throughout this entire situation, because it's not just investors that we're dealing with, it's traders throughout January and February as a whole. And I'll close off here with this, is that we do see a lot of, I almost call it random selling. Sometimes, we have the tax loss harvesting coming into the end of the year. But also some of those losses that weren't harvested get pushed off to January and February. So that piece is not really over. So that said, I would look for this right around 670s area to hold as this week's support. And then I would actually look for a pretty big bounce, but I would caution that with don't be fooled with the bounce, because unless that bounce is holding well over 690, it's very likely an area that will act as resistance. And I'll just put one more level over here, and that is this prior all-time high. So right now, what we have from a structural standpoint is something called a look above and fail. It's just what we call it, where price has looked above, right up here, and then we just failed. This is SPY. I'll call it there. And so that means that we should probably go into the bottom of this consolidation range, which is about low 670s, and then retrace. Is that a bounce to sell? That's your call. For now, I might defer to yes, but you don't have to sell it. It's more of like, what area are you in? I'm just going to do Qs really quick because we did it last week also, and this was that consolidation here. And we said, look, up here, usually I'm not inclined to take the first like break of any of these trend lines. I'm not a big trend line guy. I think they're important, but I'm a structure guy, I'm what we call a price action guy. And that said, price action, same thing. We have this, unlike SPY, never actually became a bullish chart. It was just telling me, hey, look, consolidation. Our high was locked in over here. Then we had a lower high, but we did have higher lows, which gave us this kind of consolidation. Today is a clean break below. It's not too dissimilar. It's like, if I wasn't short already, do I continue to press this short? Well,
that's another question. I think a lot of people should they pay the elevated premiums on the puts today? Not today.
I think that today it was very knee jerky, and they're going to be elevated. But I think that what you can do is like we did on SPY, or not SPY, on Hood, and I did on Tesla, is sell some protective calls. So I would look at doing something like that, probably at this point out to July, and if not further. But just take that with a grain of salt. We're not super bullish at the moment, but at the same time, if you were going to be a bear coming into today, the issue with where we are is that this is all of your downside targets, if you will. So the bears should be taking profit at the very close of today, if not early tomorrow morning, or maybe even the overnight session. And so I would expect actually a bit of a bounce between now and Friday. But come Friday, I would say buyer beware, because they're not going to forget about where we are come Friday. And so if we do have a bounce midweek, I would just be a little bit cautious. I wouldn't roll with that unless you're in something that is bucking this trend in its entirety, like my Freeport, like some of the semis, SMH, which I can look at right now. Oddly enough, still holding structure. So this is that level here, prior breakout. We're still there. So then very near term broke, but like I said, especially this kind of situation, you can get one little blip like this and be right back there.
Right.
Like super easy. So it's not like that. It's not like they're totally broken, but they are all at risk, just like my hoodie, just like our Tesla, whatever. And you should be cautious, not as optimistic as before.